CNBC interview is the company's CEO, John Stankey. John, always good to have you. Stock's down a bit, off the lows, but still down about 2.6%. Perhaps some concern about churn and generally a more competitive pricing environment. Is that the case, or how would you describe the pricing environment right now for wireless services?
Good morning, David. Good to be with you. I think that's an element of it. I certainly step back and look at the results. They were really strong for the quarter, especially in the broadband segment. We added over 550,000 new AT&T Internet Air and Fiber subscribers, which is the best we've done in 8 years. So I really like the momentum there. And of course, beat estimates on postpaid voice net adds for wireless with over 400,000 adds. So it's strong on fundamentals. I think the dynamic that's going on, we're obviously the first to report in our segment. There's been a little uncertainty in the industry with some leadership changes at other companies. And as a result of that, I think people are trying to understand, is this going to be a shift in the industry on competitiveness that maybe starts to erode margins or ARPUs moving forward? And what we communicated is we feel really comfortable with where the business is, that we're focused on continuing to sell converged customers, that we think ultimately, even though we see a little bit of ARPU pressure when we bring an account together, over the long haul, that drives down churn and drives up lifetime values of customers. And we really like the position AT&T is in, despite the other dynamics that are going on in the neighborhood we happen to be part of.
Understood. I know, and on the call, I think you were quoted as saying ARPU pressure is a feature, not a bug. Dan Schulman's who you were talking about at Verizon, of course, taking over as CEO, and the expectation is they're going to be more competitive on price. Again, I don't want to put words in your mouth, but you seem to be saying you're not worried.
Yeah, we have a changeover at T-Mobile as well, and we have.
Oh, right, of course. Sorry, I forgot about Tree as well.
Your parent company now has a joint tenancy arrangement in the CEO position that we compete with. So there's a fair amount of uncertainty that's come in, and I'm not worried about our position. As I said on the call, we've assembled an incredible portfolio of assets, and most recently adding to that with some fiber footprint that we're acquiring from Lumen, and of course the spectrum that we've picked up from EchoStar. And we think we're building this business for durability. We think we're building it in a way that's very unique in the kinds of products and services that we can offer moving forward in AI. And I think the previous individuals in these jobs have been very competitive on things like price, and we've done well, and we're going to continue to do well.